Hey guys, it's Matt and welcome to Mentorship Monday. Thank you for watching. If you guys have questions you want to submit for us to answer here on the YouTube page, you want to email them to helpme@DeRosaGroup.com. That is helpme@DeRosaGroup.com. If you want to hear more about what DeRosa Group's up to, you want to go to www.DeRosaGroup.com. You can join our mailing list. You can communicate with us on that page. You can see everything that we're up to. And again, reiterate, join our mailing list if you want to hear about investments that we have or projects that we're up to or anything like that we're doing. You can access that through the DeRosa Group website. So today for Mentorship Monday, we've got a question from Nick from Chicago. Nick, you are awesome. Nick is a repeat Mentorship Monday question asker, and you rock because you're asking very good questions. And Nick is a college student, and I love that about you, that you're already thinking about investing in real estate at your point in life. Congratulations for thinking ahead of the curve there, bud. And Nick is also looking for apartment buildings to invest in long term, but to build up his wealth, to build up his, let's call it like coffers of cash to put into deals. Nick is looking to potentially invest as a partner in fix and flip projects. And that's, buying a property, renovating it, and then selling it on the open market, right? So that's what Nick's looking to do, not as a operator or as a contractor of this type of thing, but as a passive investor. Now, we've taken on passive investors in our fix and flips. It's common for flippers to take on investors as opposed to just people to lend them money. It can be structured that way if it's the right deal. So next question is, what things should he be looking for if he's vetting out a potential fix and flip deal to invest in? Great question, Nick. So here are a few things that I wrote down for you to look into, right? So the flipper's track record, you want to make sure that for a fix and flip, you do not want to go investing with someone if it's their first time doing a fix and flip. They're going to have to find their own, put their own money in, or use a hard money lender, find other sources for the capital if it's their first couple of flips. But once they've done a few, then you can start talking to them if they've done it with success. So how many flips have they done? How many do they typically do in a year? And that, see if they can produce some before and after pictures of their projects. Collect as much data on their track record as you can. Look for, get them to send you MLS listings, and then verify those MLS listings of the sales are there by talking to a realtor friend of yours or by looking on Realtor.com or Zillow. You should be able to find that specific sale and confirm that the data is correct. Look to see how long it was on the market. Look at the before, look at the after pictures that they put in their marketing package. So do your homework on them. Google their company. It sounds so stupid, but you should. Google their company to see if any of that's out there. Look to see if anything's been filed against them in complaints, Better Business Bureau, any of that kind of stuff. Maybe they've ripped off a few people that bought homes from them or something like that, or didn't hold themselves with integrity. So Google them and look for bad things said about them online and read up about it. If they've got any active job sites that are under construction right now, you want to meet them at one of their job sites and walk the site. Ask them questions. See if there's anybody working the job site when you go. And if you can, talk to the workers as well if they'll let you do it. Another question is, find out if this flipper is a GC themselves, meaning they're acting as a general contractor, hiring all the subs, perhaps even operating with their own labor in-house, or if they are hiring a general contractor and passively managing the project with a general contractor doing all the work. If they're doing Plan B, that's going to cost more money than them GCing it themselves. But there's less predictability. It's lower cost, probably higher profitability if they are hiring all the subs and running their own labor, but it's harder to predict profit. It could be great profit, or they might end up upside down because they're paying their own labor. The subcontractors are probably going to try and hit them with a bunch of change orders and stuff like that if things go wrong. Whereas if they hire a general contractor to handle the whole project, it is more predictable. The general contractor can still try and hit them with change orders, but they've got more leverage if they're writing a big fat check to the GC themselves. So they're both beneficial, but find out which one they're doing and decide which one you're comfortable with. If they're doing option one, which is GCing it themselves, make sure they've done that before. Even better, make sure that they're licensed and insured to do those types of things, which you should make sure they have some sort of liability insurance overall. Hope you're catching all this. Now, but once you've done that and validated their track record and all those things, then you want to get into the equity split and how much money how much of the profit they're going to cut you in on the sale of the property. If they're going to pay you something called a preferred return. If you're going to hear more about that, you can look it up on BiggerPockets, and I may have some videos on that here on the YouTube page as well, so you can search for it on this page or on BiggerPockets. You can read up on preferred returns as well. Should not be your lead-in questions. Go with that other stuff first to vet them out. Then you can start talking about the profitability on what their offering is. And once you get clear on that and acceptable to that, then you want to start talking about a specific deal that they want you to invest in. And don't invest with them unless they've got a specific project and an address and something under contract they want to move forward on. Don't go giving them money without knowing exactly in what project it's going to be invested. And for that project, you want to look at the comparable sales for what it's going to sell for when it's fixed up, and also comps for properties selling in current condition from sheriff sales or auctions or REO sales, real estate owned, bank owned property sales, those types of things, right? So run comps on both sides. If he's got one, ask him for a scope of work, the written up scope, to say what the entire construction project is going to break down to be. How much it's going to cost, and what the timeline is going to be. So you put your money in on this date, it spits your money back out on this date, and you know how long it's going to take and what's going to happen in between. It'd be great if he had all these things in writing. It would be a good testament to his organization and his systemization of his business if he had all these things already created to hand over to you. So you also want to check, and this kind of goes in with the equity split, on the entity structure they're going to be using. If it's a handshake agreement, or that's what they're offering, then run for the hills. If they're going to structure you with a joint venture agreement, a JV, or if they're going to get even more complex and use a limited partnership with you as a limited partner, that's the best way to do it, but it's more complicated to set it up. So those are some things you should look into. Nick, my loyal viewer and loyal question asker. So thank you. I hope that's of value. I'd love to hear how that goes, by the way. So if you think of it, shoot us an email to info@DeRosa Group, or even you can fire off a line at helpme@DeRosa Group to let us know how you made out. Love to hear from you. So thank you, Nick. Thank you all you other folks for watching. And as a reminder, please send your real estate questions in to helpme@DeRosaGroup.com, or go to www.DeRosaGroup.com to learn more about our company in general and join our mailing list. So thank you, Nick. Thank you those for watching, and please, as always, have a great and profitable week.